is immutable. The money is
The Genesis locked to the edge of the mempool. We are decoding Bitcoin's signal in the noise. Privacy, self-custody, censorship resistance. Welcome to the revolution. This is OnChain Revolution.
Welcome back to OnChain Revolution. My name is Yagobi, and I am the main host of this show and channel. I want to start today's show off with some gratitude. I want to say thank you guys for continually supporting the channel, the show on all platforms. Yesterday, we had the most viewed YouTube live stream that we've had with this channel in the past 2 months. So I'm very, very thankful for that. But that speaks more on you guys wanting to learn together because, I don't know everything. But what I do is research and then come back to the show and we learn together, right? And that's the whole objective here. But I want to say thank you and kind of kick things off with gratitude. I think that's a great way to start your day and start a show, right? But today we have a lot to get into early because at the midway break, we have the great guys and lady, I should say, from Big Noodle that are going to be going over AI and robotics. So exciting segment today to really get into. But we're going to get into the main topic of the day here in a bit, which is Bitcoin alert. A historic wealth transfer just happened. So we're going to dive into this and what this means. From when crypto started, I think the perspective of a wealth transfer has changed. And we're going to go into 2025's data to kind of see what happened there. And then we'll hit on some other topics as well. But before we get into anything, I'm going to ask you guys to help me out on the YouTube side. If you could smash that like, subscribe to the channel if you like my content. On the X side, if you could share the space, that would help me out a ton. X has had some weird stuff happening. And then, Abstract, welcome back for my Abstract audience. And then my TikTok audience. I've seen a growth in both of these audiences. Very, love interacting with you guys. So drop your comments in the chat and do the same thing on X and YouTube as well. I will catch those comments and get your comments ready and your questions ready for the AI segment as well. But we're also going to hit on some news topics as well. There's a lot of news that is going around the space today. We're going to hit on an AI agent warning whenever you're utilizing maybe OpenClaw to help you write code and more specifically smart contracts. We're going to hit on a big story here because this is a pretty big, important story to get into. We're also going to talk about Wells Fargo. They have an analyst that is looking possibly for YOLO trading to happen. So that means some liquidity could come back into Bitcoin and the crypto markets as well. So we'll take a look at that. And then Phantom Wallet has integrated an NCP server that allows AI trading with their wallets, right? So this AI meta is not cooling down. It is just only getting bigger and stronger. But we're going to start off the show like we do every single time with the market pulse. So let's get into that. I'm going to share my screen just to kind of go over the market watch events that are happening. There's not too much this week that has been planned. But we do have an event that is going to occur at 2 p.m. and it's the Fed minutes. And what that is kind of a catch up from the previous month, right? Basically, there's some additional comments that maybe the public hasn't seen that you'll see in there. So that's going to happen at 2 p.m. Eastern. And so will that affect the markets? Probably not too much. But then tomorrow we have initial jobless claims that comes in every Thursday. And then Friday, the GDP, I think that is going to be a big metric that people are kind of waiting for. And that could definitely affect the markets, right? We are going on our 5th day in a row for the partial government shutdown. So that is definitely something that negatively affects the markets as well. But let's check out the markets and see how they are currently reacting to everything that's happening, right? Bitcoin will hit on we'll hit on deeper once we get into the price action. But let's kind of get into starting with the stock market. And everything across the board looks kind of green a little bit here. So you see S&P up 0.89%. You got the NASDAQ up 1.3%. You got the Dow Jones pulling up barely 0.6%. And then the VIX has pulled back, actually. It was in the green yesterday, but now it's back down 7.5%, meaning that volatility is cooling a bit. So that's always good. You don't want the markets to be super crazy and volatile all the time. The Dixie is up 0.3%. The Russell is up 1.5%, which kind of aligns with what the Wells Fargo analyst was talking about, right? Potentially YOLOing into more risk on stuff. And the Russell is definitely an index of risk on stocks. It's more of the lower market cap there. And then you got the Magnificent Seven here up 1%. NVIDIA comes in up 2.9%, Google up 0.6%, Apple up 0.66%. You got Tesla up 1.5%, Netflix up 0.86%. Futures are up. They're in the green. You got oil up 3%, and then silver up 6%. And then you got crypto and the commodities here, the precious metals, Bitcoin pulling back 0.5%. And then you got Ethereum pulling back 1.25%. Gold back above $5,000 though, right? So that is definitely, like good for precious metals here. Gold's been kind of hovering right below 5,000. So the fact that it's above showing some strength there. And then silver is up 6%. Up about 70 up to $78, right? So all in all, the markets look pretty decent. Crypto's looking a little bit weak though, a little bit weak right now. We'll see how it plays out for the rest of the day. All right, now let's get into this main topic here. Bitcoin alert, a historic wealth transfer just happened. Let me check and see if X is working here. I want to make sure because it looks like it might have disconnected. All right, I think I got it. Okay, cool. So, all right, let's get back into this main topic, which is Bitcoin alert and a historic wealth transfer just happened. So it didn't just happen, right? But data came out just recently. And if you, I'm going to pull up this article here in a second, but I want to talk about what this is all about, right? River Financial's report shows individual investors sold 696,000 Bitcoin in 2025. So that's not just a big number. That's an actual record. It's the largest annual drop of Bitcoin from individual retail, basically, right? So retail sold 700,000 Bitcoin. Meanwhile, institutions accumulated 830,000. So if you go back to 2017, because that's whenever I really started to get involved with crypto. I bought my first Bitcoin in 2013. But if you go back to 2017, there was always this narrative of how crypto and Bitcoin would be this huge transfer of wealth from the wealthy to the regular everyday people, right? And that's why crypto was so attractive, in my opinion, to just regular everyday blue collar workers, just anybody, right? Because it was their chance to really, accumulate wealth and be a part of a wealth transfer. And so I think that did occur in the bull market of 2017 and 2021. But what happened in the 2025 bull market is the opposite, right? Like we just went over, 700,000 left retail holders and 830,000 went into institutions. So I'm going to go into this article real quick, which is a great article, and it's by the Crypto Basic, but it has all of the River institution information and data here. And it's titled Institutions Amass 830,000 Bitcoin as Retail Offloads Nearly 700,000 in 2025 Bitcoin Shakeup. And if you look back at 2025, that was the biggest consistent comment that was coming through crypto Twitter. Where's retail? Where's retail? Well, now we know that retail just sold and didn't really participate much. And it goes on to say Bitcoin ownership underwent a pronounced realignment in 2025, with institutions absorbing the circulating supply while individual investors reduced their exposure. According to the latest ownership study from River Financial, this change isn't just a market cycle, it's a major turning point in Bitcoin's ownership history. Key points here, corporations, funds, and government. So those are the three entities type groups that were accumulating Bitcoin. They collectively acquired 830,000 in 2025, reshaping market control. We know that individuals and retail sold 700,000, but going deeper into this, it says corporations lead institutional buying. So out of the 830,000 Bitcoin that they acquired, 489,000 was from institutional buys, right? So that to me kind of spells out, those moments whenever you're in 2021's bull run and people are saying this is the last chance that for generational wealth, right? Type situation. Now, I don't think that that's the case. I don't think that was the last time for generational wealth to gain that and be in that situation. But I do think that this cycle is whenever institutions and TradFi really came in and changed the game in the way where the advantage was passed over, right? And that's okay because, people do very, very well in the stock market. You just have to pay more attention, learn more, and that's what we're all here for, right? All right, it goes in further to say investment vehicles expanded in parallel. Funds and exchange-traded vehicles added 205,000 Bitcoin in 2025, signaling rising demand for regulated, structured exposure. Governments followed suit, and public sector wallets recording net purchases of 135,000 Bitcoin. The report links this activity to increasing state-level engagement with digital assets. All right, so we kind of know what the whole deal is right here, right? So it was a transfer of wealth back to the wealthy, back to the institutions. And if you look at this weekly chart of Bitcoin, and I mapped out when this occurred, right? When retail was basically selling to institutions, you can see right here in January of 2025, at the end of it, right? That's whenever things got really tough for crypto. And, people were just kind of scratching their head, what's happening here? The Trump coin launched in early January, and then towards the end of January, it just seemed like it got really bearish. And then this lasted from January to right before April, right? And then you had the institutional rise up of Bitcoin to 126 in October, and then it's been pretty much another sell-off of retail happening since then to where we are today. Right. So why is this important? Because I think this is important because we need to realize that we're in this situation to where most of retail was scared and they were selling into fear. We had the lowest fear and greed scores during these periods. And recently, and we're continually selling off, our retail is the fear and greed hit a 5, right? And so the reason why this is so important is to really recheck your conviction, right? Do you really believe in Bitcoin? Is that something that has changed? Because if it hasn't, then you have to know that this is still an opportunity of a lifetime, right? Because right now is the worst time to offload your Bitcoin, right? You just saw El Salvador starting to acquire again a couple of days ago, right? Yesterday we talked about it. And some of these institutions are quietly starting to acquire. Now, Strategy and what was it, Bitwise, right? With Tom Lee and Michael Saylor, they're continually acquiring. They kind of have to, right, to the public. So, just don't sell your Bitcoin to these institutions, right? And I'm talking to the people that had the conviction and continually have the conviction of believing that Bitcoin is the answer to be able to kind of set you and your family up in the future. So that's my stance on the main topic here. I wanted to kind of bring that up because I don't think many people realize that 2025 was the largest sell-off from retail for Bitcoin. And that means that this is a change in structure of how the overall market works. We got a couple comments in the chat here. We got a bunch from earlier. I'll just give a quick shout out to the people. PeersNet back in the chat. What is up? We got OCM Fever here. And then we got Dogs on Air. Superfan, M Delusion, and Almond Joy. Welcome to the show, and continually drop your questions in the chat as well, because I know a lot of you guys have a lot of questions for the Big Noodle team, which will be here in about 15 minutes. Rick G says, LFG Big Noodle. Yeah, excited to have them here every Wednesday to educate you guys and myself on AI. I mean, that narrative is not going away. It's only getting stronger, right? But let's jump into some quick news because, we definitely need to cover a couple of things before we bring the team on. And this is one of the things that we have to talk about here, right? Let me pull this up. So there was a situation that happened, I want to say the past couple days, to where an AI agent was used to help code a smart contract. And some things went wrong here. So this is a post by Peshav. Actually, I was hesitant on showing this because I typically don't just show Twitter accounts unless there's some news that backs it. But there's an article that does back this. So I'm going to go over that. But this quick headline here, it says Claude Opus 4.6 wrote vulnerable code leading to a smart contract exploit with $1.78 million in loss. Coinbase ETH assets price was set to $1.12. Imagine that. Imagine Ethereum being set at $1.12. All the bots went absolutely crazy. And it says instead of 2,200, the pull requests of the project show commits were co-authored by Claude. Is this the first hack of vibe-coded Solidity code? So this is kind of the situation that people like nightmare case, right? Now, this was only 1.8 million. And I say only because it could have been a lot worse, right? But if we get into this article that goes a little bit deeper into it, I think it's important to get a little bit more context here. It's Moonwell was the project, by the way, that was compromised, or their smart contract was, right? It says Moonwell is a decentralized, over-collateralized lending and borrowing protocol originally built on Moonbeam and now active on networks like Base and Optimism, allowing users to supply assets such as USDC to earn yield or borrow against crypto collateral through on-chain money markets. So this is the post-mortem. This is what they had to do afterwards. It says February 15th was the incident. That's when it occurred. When governance proposal MIP X43 was executed, enabling Chainlink OEV wrapper contracts across core markets on Base and Optimism. According to a post-mortem published on Moonwell's governance forum on Tuesday, one Oracle configuration incorrectly derived the USD value of CB ETH by using only the raw CB ETH pair exchange rate rather than multiplying it by the ETH USD price feed. As a result, Coinbase ETH was reported at approximately $1.12, reflecting the Coinbase ETH ratio instead of its intended market value of roughly 2,200. Liquidation bots immediately targeted Coinbase ETH backed positions because the system believed Coinbase ETH was worth just over $1. Liquidators were able to repay minimal amounts of debt to seize large amounts of collateral. Wow, good for them, right? These bots that caught that because they were able to save a ton of money, right? That they owed, but not good for the overall ecosystem, right? Because now you have a protocol that is out $1.8 million. So this is something that we got to be aware of, right? And, when we had Big Noodle on the show last Wednesday, that was something that Superfan and Dr. Mian were kind of saying, hey, look, I mean, there's security risk to a lot of this stuff. I mean, this is smart contracts. And at the time we were talking kind of putting OpenClaw on your local machine and all these things. But this is just something that we got to be aware of, knowing that it'll get better, but you will always have to realize that this is a possibility. And I think with protocols that are managing that much TVL, they have an extra layer of responsibility, with audits, especially right now, if they're going to use Claude to help write Solidity code. All right, we got another comment in here. Oh, it's Superfan right there. All right, let's continue on here. Okay, so that's kind of, where my stance is on this. Just keep looking out for these type of headlines and be careful, right? If you are a builder, especially. All right, this next headline I think is good for the overall space, but this is reported by MSB Intel. Cointelegraph uses his tweets a lot, so I feel comfortable doing that. It says, breaking, ECB President Christine Lagarde will resign before completing her 8-year term. Will the next European Central Bank president be crypto-friendly? So I think this is positive for the crypto industry because Christine Lagarde was very anti-crypto. Her stance seemed very, very negative towards it. She seemed more in line with like the WEF type of situation, and just the old way of doing things, the old kind of globalist way of doing things. So down early. First of all, it's interesting that she didn't finish out her term. Secondly, this could be bullish for the European Union and that whole region. Now, they've been pretty, aggressive with regulation, but they've been putting it out there for builders. We had a centralized entity from Europe called Bitpanda on the show, and we interviewed them. But, the ones that really are pushing forward and having success in Europe are following all of the guidelines that the EU has put out for them. So there isn't necessarily like any major changes that needs to happen, for her replacement. But the fact that you're getting kind of an anti-crypto individual out, I think is a positive for Europe. All right. Let's get to this story here. Wells Fargo. Wells Fargo sees YOLO trade driving 150 billion into Bitcoin and risk assets. Right. So this is what I was talking about kind of pre-show, right, to kind of break down a little bit of what we were going to hit on. This article is by Cointelegraph. It says a Wells Fargo strategist said bigger U.S. tax refunds may revive retail risk taking late March, potentially sending fresh cash into Bitcoin and momentum stocks. So they are saying that maybe some of these tax refunds are going to help pump up the risk on areas, right? So Bitcoin, alts, which alts need some sort of energy injected back into them, right? Tax returns typically do pump markets, right? But they're also talking about the risk on stock market as well. It goes on to say U.S. tax filers may see bigger refunds in 2026 compared with previous years. A development one Wall Street strategist said may boost risk appetite for digital assets and tech stocks preferred among retail investors. And so when we talked about the potential of, Ethereum and Bitcoin getting a little bit lively at the end of this month and heading into March, this could all play in together, right? So this is definitely something to look at and just keep your eye on, because we could see a thrust of energy, I guess you could say, for the alt markets once the tax returns start coming in. I know everybody's trying to rush those in, and I'll tell you, with the crypto transactions and stuff, this year has been the most difficult for me personally because of the way that they're handling it. But there's a lot of tax software out there that you guys can find. I'm going to probably try to build something maybe with one of my AI models to help me with that. But nevertheless, this definitely could provide a boost for sure. All right, really quick, I'm going to get into some Bitcoin price action before we get the team up here. Let's try to see where Bitcoin might head heading into Thursday and Friday, which is the big GDP numbers, right? So looking at Bitcoin starting here on the hour chart, you can see Bitcoin is still in this little bit of sell pressure momentum. It is pretty weak, though. You can see that it almost broke down completely out of it. But then it opened back up to the downside, right? You do see the fast line kind of curling down there. And then just really, that slow line staying right above it, right? So we need to see a continuation of the breakdown up here and this blue line start to curl up to come out of this. But it's showing that it might want to reverse to the downside. We're hanging around that 20 to 25 point mark for the stochastic RSI. So still, it looks pretty weak in my opinion for the next 2 to 4 hours at least. If we start to see a breakdown here, then, we can maybe hope for it to come out. But as of right now, everything's pointing further down. So that's what I'm seeing for Bitcoin on the hour chart. Let's take a quick look at the 4 hour chart here. 4-hour chart has a continuation to the downside. So really just giving support to that 1-hour thesis for the 1-hour chart there for Bitcoin. So looks like probably further down here for the 4-hour, right? Heading into the weekend, that's a possibility there. And then the daily here for Bitcoin, very, very weak buy pressure here. So yeah, I'm just showing weakness here. I think we might get our 5th week of negative returns in a row for Bitcoin, which is going to be very rare territory for Bitcoin. That's only happened twice from 2014 to 2026, so in a 12-year period, right? But as of right now, not looking great heading into the last part of this week. And then Ethereum is going to be very, very similar here. Let's take a quick look. All right, the hour chart for ETH, same thing, showing weakness here on the hour chart. Looks like maybe further down. I thought we had a chance maybe yesterday to get to 20 or 2050. We reversed course, right? So looks like it might want to break down a little bit further here. And then going into the 4-hour, losing all the buy pressure that we had there. And, ETH was a little bit more bullish yesterday than Bitcoin, but we're losing that momentum right there. And then on the daily, it is, still in buy pressure. It looks a little bit better than Bitcoin, but Ethereum's been following Bitcoin for the past 6 months, right? So it will most likely continue to do that. And if Bitcoin does head into this 5th negative percent return rate week, then ETH is going to be right behind it. So that's what I got for Bitcoin and Ethereum for the 1-hour, 4-hour, and daily, kind of heading into next week's forecast a little bit. We'll touch on it for the end of this week as well. But looking at the top 100 of the alt market here for crypto bubbles, you got Wilfi really sticking out here, up 23.3%. You got Pippin up 10.4% here. So this Pippin meme coin is the one that I'm going to say it again, you guys got to be careful with. Because it has been jumping around from 400 million to 600 million, right? And right now it's up, AI is up, so it's riding on that whole train right now, but it's up 10.4% on the day. But if you are in that, I just would say, take caution. Morpho is up 6%. You got Atom up 7.7%. The Trump meme coin is up 2%. PaxG is up 2.1%. You got Polygon up 1.3%. And Polygon's been kind of in the headlines lately. They definitely have been looking strong. You got the stablecoin by Tether up 2.2%, and then Monero up 1.6%. Everything else is in the red. About 85% pulled back in the alt markets in the top 100. You got the Pump coin down 5.7%. Tau surprisingly down on the day 4%. Tau has been also kind of on a heater because of all the AI stuff, right? All the AI narrative that's been really pushing it there. But yeah, that's pretty much everything in the top 100. Let's take a quick look in the top 200 and see what is getting hit. You got River down about 21% here. You got the Mix protocol, which is a perps and leverage DEX, down 16%. VVV down 9.2% here. And then, I guess you got a couple of anomalies. SPX, the meme coin, up 8%. QRL up 12% here. But yeah, the markets are not, in the crypto space, are not really loving what's happening right now. Rick says, at Super.fan, meetup in Las Vegas again. Yes, I'll actually want to go to that. I know that Superfan went to Vegas for the conference this year, and I missed it, unfortunately. But the next year, I am going to be joining for sure. But all right, guys, that is going to wrap up the price action and crypto bubbles. Let's bring up the team that is the experts. So this actual segment is named OnChain Noodlution, and that name was created by my guy Superfan. And so let's bring up Big Noodle, which is Superfan, and Dr. Min. Welcome back to the show. Let me actually bring you guys up though. Oh, you're on mute. You're both on mute.
Hi, how are you doing?
There we go. How pro of us, right?
How you guys doing?
Doing well. How you feeling?
Feeling okay. Obviously the overall crypto market is not showing a ton of energy, but AI is, right? And so that it seems to be one consistent bright spot for, Bitcoin and crypto. And I know Bitcoin, you guys are building in Bitcoin, but outside of that, you have I think maybe the Spark network or Lightning, putting out a little bit about AI. You guys have been building in AI for the entirety that you've been here, right? So you have more experience with that. But I'd love to hear kind of what's happening in the space. Maybe you guys have a breakdown and can catch up the audience and educate the audience, and we can all kind of have maybe a Q&A afterwards.
Yeah, for sure. And yeah, having one foot in both worlds, all I can say is I'm so bullish. It's you know, there's a lot of bear market woes that a lot of people are feeling, but the bridge between AI and crypto is really exciting. And I'm so glad you led with wealth transfer as a topic, because that's kind of what I want to talk about today too, but it's with a laser focus on what AI and robotics is going to bring to the crypto game.
Yeah, and so yeah, definitely. I think people that are in crypto and have been in crypto for a while are probably looking for opportunities that they can find, because it's not easy anymore as it was back in 2017, 2021. But this gives them another opportunity potentially to be in this wealth transfer situation that maybe they missed out on the last cycle, right? I'm curious, Dr. Mian, what are your perspectives on that? Do you think that this AI crypto narrative that's happening right now, is this going to be more for people that are just really studying and diving deep into AI and crypto every single day, or will it be more open to anybody that's just kind of wanting to have an opportunity? Oh,
Okay, so I've heard of the kind of comments which is like crypto
I
is
can't
dead.
hear her. Can you hear her?
Hi, can you
Okay.
hear me? Hi, hello. Okay, so great. So I've heard some kind of comments which is like crypto is dead, and people are flowing from Web3 to Web2 again to AI, but I don't really agree with that. So I think AI would definitely give or like inject new energy to crypto for sure. And last time we were talking about X402 as well, which could be AI agents native payment, like that is run on crypto. So I'm very confident about that. So yeah, that's my comment.
I missed the first part of it, but it seemed like you were saying that there's this narrative that everybody is doing a mass exodus to only AI, away from crypto and going more into Web2, but you don't agree with that, correct? Is that what your stance is?
Yeah, right. So I've seen some pretty much pessimistic like comments or narrative about that, but it was like probably 1 or 2 months ago saying, and all the developers they are flowing from crypto to AI again and stuff like that. But I think AI could be injecting new energy to crypto for sure. Yeah.
Gotcha. And there was a lot that came out from Hong Kong consensus that was just really negative on crypto. I had a couple buddies that were there, and that was pretty much what Dr. Mian just broke down is what I was hearing. But I don't know if they realize that a lot of these agents are using X402 Rails, or they're going to be using it. So to me it seems like a merging of an opportunity, of merging of two technologies that are going to really benefit each other. I don't know. What do you think, Superfan?
Yeah. It's probably the way I see it playing out is that it'll be one of those situations where you won't necessarily know when AI is actually bringing value to the space under the hood. It'll be behind the curtain in some ways, right? X402 is a good example of that. When agents are talking to agents and transacting between each other, it'll make life easier for us meat bots, but we won't always see where it's doing a good job to help us. And I think we've seen that in the web, and we've seen it in a lot of technologies that change life. Like at some point, it's behind the scenes working for us, and that'll happen here too, for sure.
Yeah, and I know you guys have some kind of updates with AI and robotics, which is the topic of today. So I'm curious what you guys have for that. There's a lot of stuff that is starting to merge with those two parts of AI.
Yeah, yeah. Let's get into that. And I just want to say you also started the show with gratitude, and I have some gratitude to you, Yagabi, for trying a format here. And maybe folks in the audience, let us know what you think of this. I prepared some notes. Call it an essay. It's a few minutes. I'm going to kind of recite this because I wanted to frame robotics. It's one thing to talk about where the projects are at today, but to know where we're going to be later on in the cycle and next cycle and where huge wealth transfer is possible. I think it's good to also look back at what's worked. We're not in brand new territory here. There's some things that rhyme, and that's what I want to touch on for the next few minutes. So yeah, I'm gonna jump in. Um, I'm going to spend a few minutes to provide a bird's eye view of the intersection of robotics and crypto. And some of this briefly touches on some very sensitive histories, but I promise this is meant to be respectful and optimistic for all. Um, Let me start with where we are at now. Literally, San Francisco has huge underground robot fight clubs with packed houses by people who are showing up in their Waymo robo taxis. It's completely surreal, and more is absolutely taking shape right now. Like these are the first steps to seeing those things invade society at large. And I said I was bullish before. I'm extremely bullish, and what I'm really bullish about the most is that I'm a believer that crypto and AI are the two most transformative technologies of our time, and that they complement each other perfectly. That's the key point. You might say each is the killer app for the other. Today, AI is in its infancy, and the natural path forward for it is embodied AI, which is another way of saying robotics. With it will come an age of abundance, which cannot reach its final form without crypto rails staying innovative every step of the way. You've probably heard the saying that history does not always repeat itself, but often rhymes. And this dynamic duo rhymes with other times in history when huge, huge wealth had been created. It's happening again today. Um, so, looking at the AI and robotics projects that are building now, probably isn't where we want to put all our focus. We want to see where the puck is going, and so that's what this is about. So some history here, just a little bit. At the beginning of the European colonies, extracting from the New World on the backs of others created a ton of abundance. It's a sad story, of course, but it was abundant only for the folks who controlled labor. This made a kind of generational wealth which gave rise to the Industrial Revolution and hundreds of years of continued compounding wealth for those new one percenters. Labor and production was key. And in an age of robotics, let's not get it twisted, there's something that rhymes here. Um, we can also look at the early car industry, which saw 2,000 plus car companies form as society switched from horses to cars and engines in factories, creating new strategies around supply chain. Um, the leaps forward in wealth were again meaningful for those who took part. And the connection I'm going to draw in supply chains has a lot to do with China. So we're looking at a near future of extreme abundance thanks to robotics. The two playbooks I just mentioned will rhyme for the modern day Rockefellers, except for one thing. Crypto is here too, and with its decentralized ethos, it means a lot. Um, this is how it'll likely play out. Remember those 2,000 car companies I just mentioned? They all built bespoke products. Looking back, they were a bubble, each one of them their own bubble. That level of competition could never be sustained. Consolidation naturally occurred until the US ended up with the big three. And worldwide, less than 20 companies are making all cars and parts. Many are built to shared standards. China today has a long lead in robotics by its expertise in supply chain, but they're running back that same bespoke history. They will experience consolidation, and it's in this consolidation where the best ideas win. Today, this translates to good data sets for AI models. The robots, whether they're humanoid with hands or tentacled or whatever, will be a competitive race to the bottom. That means very low prices. Nearly every home got a car in the driveway over time. Every home will now get a robot or two or three. The good data will lead the innovation, though. I can't say I'm super bullish on every crypto project talking about AI and robots today because, buzzwords are good for short-term narratives after all. But I'm extremely bullish on the crypto projects which incentivize the collection of uniquely great data sets. This time around, folks like you and I can be part of the greatest abundance creation ever known. And I do believe it will be a sea change. We'll see the greatest abundance created. And some quick framing about that. The money is changing hands today for AI deals, Elon's salary, data center costs today. This scale has not been penned since deals as big as, wait for it, the Louisiana Purchase. For real, I'm going there. So for the non-Americans in the audience, that's when a tiny young USA purchased 1/3 of North America from France. Today, that'd be a $1.3 trillion land deal. But it's not really about the cost, it's about the potential. America had such a stage of growth moving forward because of the potential that was locked up in that land. So that's how we should be looking at how transformative today's AI deals are. And that unpaid labor mentioned earlier was responsible for 50% of US GDP, which will probably pale in comparison to what's coming. Robotics are an estimated $350 trillion shift, and it's a baby today, but a really fast growing fat baby, right? It's likely to be the largest asset class when it hits its stride, not to mention the 24/7 productive work it yields. And I promise I'm almost done here. Now I'm bringing us forward to the modern day and crypto. So what are the projects which are likely to be here for the long haul as wealth from this industry continues to compound? I've been keeping my eyes on Fetch AI, Near Protocol, Peak, spelled P-E-A-Q, and Track Network. And we're also building with all of this scope in mind. But let's frame it this way. Here's a statement in quotes for you. Crypto is not funding robots. There's enough cash out there already. They don't need our value from the blockchain. But blockchain is building the data markets, the identity systems, and economic rails that will let robots unlock the new abundance economy. That's a big deal. And the biggest and most meaningful obstacle today to that is useful data. So the physical robot is far easier to build than the AI models themselves. And I'll close with an example. I'll use our own crypto use case at Big Noodle as an example. So we offer, and I don't have them next to me, actually, I should have, but we offer our AI glasses, right? We don't want to build AI glasses to go up against Meta. There's a reason here. Web3 centers on community, and we're mobilizing that community with an earning mechanism. The AI glasses have cameras on them, and we issue video bounties every week. So if you have the glasses, you shoot a 1-minute POV video of the task we request. Maybe it's frying eggs, maybe it's changing the tire, right? You get paid for that 1-minute video. The ROI on the AI glasses is really attractive. And so what we end up with is accumulating a really large, really good data set for useful training of humanoid hands. This is the kind of data that's tough or impossible to scrape, right? So the model is sure to be a winner, and it's built by community, and benefits are shared across community. And that's where we get to kick in the door, where in the past, a market that was led by a new shift in technology, a disruption, was often controlled by, it created and was controlled by a 1%. In this case, we're here. We're able to be here, and we're able to be part of it. Last comment is the age of robotic labor is coming, but for the first time in history, the wealth it creates doesn't have to be centralized. We can take part starting this cycle. Look for the AI projects to get into today, and when bear turns to bull, these will likely be outsized, especially over time. And it's not financial advice, but that's where all my bets are on, based on this whole scope I just presented to you.
Yeah, so I think that was really, really great, actually. The breakdown and kind of just perspective. And I liked how you sounded like a college professor for a second, because you were using time periods of when America started to really show growth, right? But it makes sense, right? Everything that's happening right now, the people that are paying attention, you're here. You have the opportunity. Now, you know, the way I started the show and the main topic of the show with the wealth transfer situation is we're seeing kind of capitalism take its, you know, strong arm with crypto right now in America, and all these institutions basically, you know, being probably smarter than retail and not making attractive crypto look very attractive while they're buying up all the retail selling it. Now, what's happening with the AI side is with robotics and all these other like parts of it just coming to light. We're still in those early stages for people to have that opportunity, right? And Dr. Mian sent me a link, and where I saw, was that real, Dr. Mian? The robots doing like the Kung Fu demonstrations, was that actually real or was that AI?
That's real. That's happening on the Spring Festival show. It's the Chinese New Year's Eve show. It's a big one. It's like broadcasting the whole throughout the whole country, and everybody was watching. And who's on the stage? They're actually robots. So that's really amazing.
Yeah, I mean, I was shocked. I was completely blown away. The fact that they can just maneuver so well, get back. Their balance is incredible. Probably starting to be as good as humans in terms of balance and stuff like that. But we are in this next phase of, you know, are we in a simulation kind of situation? You said they are babies, but can these babies kill us? That's the question.
Well, yeah, that's the thing. So a couple of conversations that are going to converge, I think, in the future, and I'm really tuned into this side of it, the kind of the anthropologists, armchair anthropologists' interest would be: will robots get personhood rights? Right? We're using them as labor 24/7,
Yeah.
and they're built for that. But what happens when personhood becomes an issue? And governance around how to use them for war is a great example of where lots of pushback will happen. But the reality of it today is that this is property. This is hardware, like any computer or G-Wagon or tank. And people like Andrew are going to definitely use robots for that purpose. So this is something that's going to evolve and change, and it takes governments, it takes people, and we'll see where it goes. I think from the crypto point of view, though, it's easier to kind of look through a funnel and focus on productivity and the models, and again, where the puck is going in terms of which companies are doing it right, which are making the right bets on what should be blockchain and what don't need to be.
Yeah, and I think there's a trust issue a bit with the crypto space when there's a strong narrative that comes into play, because they like to play the narrative and then stop out of nowhere. But the one thing that sticks out to me is seeing wallets like Phantom Wallet, you know, integrate MCP type of environments for these wallet agents to use their wallet, and Base coming out with that. Now, that's like, okay, that's got me more intrigued. That makes me more confident, builds my conviction up a little bit more. And then, you know, that next step, there's going to be a step where it's like, okay, this is it. Like, this is, crypto's not playing around with the narrative. It's actually a part of it. And I'm feeling more and more towards that for the first time in a long, long time.
Yeah, I you know, it goes without saying in my mind that AI will continue to use crypto rails, because you can't do any of the stuff that the AI needs to with fiat. And you can take the fiat system and give it an API, sure, but really stables is where it's at, just because of cross-border business. And that's a guarantee. I don't think there's any robot builder also who would switch to bank transfers, you know, or Western Union. It is crypto, and it is stables.
Yeah. Sure. Yeah, for sure. I agree with that. We do have a couple comments here in the chat. Stan, which is really big in the AI, says Tesla Optimus. Is that a model that you guys kind of look at right now? Do you think that's one of the leading models?
So Tesla Optimus is really interesting because so little info comes out from the development, but Elon likes to do show and tells where he surprises everybody. Some of the companies that are my favorite company actually that will give Tesla a run for its money is a company called Figure out of Palo Alto. Elon has, or I should say, Tesla has the data centers already, and they build them quick. They also have all of the intelligence from the driving car use case. But companies like Figure are hot on their heels. Tesla won't be the only one, and Optimus may not be the poster child here.
Gotcha. I know there's a lot of Chinese companies too that are really, in the lead for that kind of stuff. Stan also,
let me jump in there real quick.
Yeah.
So the recent CES, and I also had my eyes on what was happening in Davos. There's so much on show from China. It's just that they're better at doing the hardware, and they're really good at doing AI models. But I think what we're seeing is companies like Figure doing integrations sooner. I think we saw 37 companies at CES doing hands alone, but they need a software stack. So that really goes to show that thinking globally and working together is probably going to be the secret sauce here. And I'm interested to see that happen.
Yeah, and I think working globally is important in case the robots turn on us.
Yeah.
Like at some point, right? Like you want to work together as humans, but no, obviously that is like worst case scenario. But Stan goes on to talk about Greenland. I guess that's why people want Greenland, maybe for a lot of the minerals and the earth, rare earth metals and stuff like that there. And then Hedera, he mentions Hedera. Courtney Johnson says, thanks for the case for reparations. Interesting. I don't know how that. For the historic.
Yeah, the historic
background there. Okay.
Yeah. And it's when I wrote that bit in, I thought it was really important to handle this sensitively.
Yeah.
But I'm 100% on board with the idea that the world's going to change again.
Yes.
It'll look different, but there is something that rhymes here, and we should all be aware of it.
Gotcha. Dr. Mian, I didn't get to ask you your opinion on Superfan's kind of eloquent, piece that he wrote there. Do you agree with all aspects of what he talked about?
So
what he was mentioning about like how like the industries in America are changing and we're going into like this big new opportunity.
So I'm not sure if I have good signal.
Yeah, I think she's breaking up.
Yeah, Yagami, she's in an Airbnb today, so she might be having Wi-Fi issues.
Gotcha. No worries, Dr. Mian. Yeah, appreciate you trying there, but it looks like maybe your audio might be disconnected.
Yeah.
Gotcha.
Okay, if you can hear me, I can talk a little bit about that. I want
You're good now.
Yeah. Okay, I want to get at that. Actually, for I talked about X42 last time about it becoming a native payment method for AI between AI agents. It might be a payment method between like physical AI, which we call robotics, right? But I still think that there is a moment yet to come, which is called the GPT moment for robotics, and it hasn't come yet. Which is like so currently lots of robotics companies, they're pretty like in pretty much vertical scenarios. For example, you need a robot to do the housework for you, to like sweep the floor for you, stuff like that. But if there is a foundation model, which they call embodied foundation model, then that will be generalized a lot.
Yeah, I agree. I think even the LLMs probably aren't there yet to where they can be integrated into the robotics.
Yeah, I finished talking. Can you hear me?
Yeah, I can hear you now, but I think you're going in and out. But no worries. I appreciate your feedback. But yeah, kind of what she was saying. I think the LLMs are right now kind of, they're obviously the best that they've ever been, but whenever you integrate it into a walking robotic type of situation, there's so many more situations that are kind of, that are tangible, what I mean?
Yeah.
And that changes things, right?
Yeah, and just to give a little meat to this is Jan LeCun is the scientist who comes from Meta, and now he's doing his own thing, and he's written a paper called VJAPA, and VJAPA is all about having a spatial model. It uses video for the most part to understand the world around it spatially. Really useful for robots, and robots are going to have cameras not only where eye sockets are, but in their hands and on their back, and they're different kind of cameras. So this is where you're absolutely right. An LLM is good at giving the world context. Like there's a cat in the air, but cats don't fly. The LLM can figure that out pretty quickly. But it's the spatial model that will understand distance in space, and that the cup shouldn't be so close to the table because it's able to see it in 3D and maybe even more 3D because of all the cameras. So these two combined become what a robot sees.
Yeah. I mean, I think it's definitely exciting. There's always new kind of improved situations happening with the space, and I think it's gonna actually. I think AI is bringing crypto up right now, in a sense. Yes, price. It goes to show that so many people in the crypto space just only cared about number go up. Even with all this exciting stuff, they're just kind of like, no, it's about AI. But then they're overlooking all of the news and stuff of the integrations because they just care about number go up. But the people that actually care about the crypto technology and the rails and incorporating that with AI, like you guys and people that are still here and putting effort into learning about it, those are the people that are going to benefit the most.
Yeah, and like I really want to drive home the point that like this is not a diss to virtuals, but when looking very short term at like a trading bot, we talked last week about why that's hard, why we don't see like a ton of rich agents, just killing it in crypto. But the thing I really want to drive home is that there's a much bigger wealth exchange about to happen, and I don't know if it's in 1 year time frame or a 5 year time frame, but it's coming. And anybody who's wise enough to take it seriously is going to do well. There's no way around that.
Yeah. But like from a regular person that isn't super techy, how could you position yourself for that?
Yeah. So it's going to take some reading, some research, because my family's a bunch of normies. Most of my friends are normies. I couldn't convert them. And you would never know, judging from their 9-to-5 lifestyle, that any change is on the horizon. Yeah. There hasn't really even been a big consumer AI push other than the prompt. So they're familiar with the prompt. They're talking into their phone, but behind the scenes, there's so much more happening, and everybody's going to be in for a surprise unless you're taking the time to tap in.
Yeah, so it almost goes back to like, to the regular everyday person, even the stock market. You go back 10 years ago when Google is booming, Apple's booming, and all these things. Like the regular blue collar worker, they still have to like do their research into it, and then they can get exposure from the stock. So regular people, doing their research into AI, they have a couple of options of exposure eventually if they do the right research, right? Either the digital asset route or the traditional stock or trade stock route, right?
Yeah. I think one of the problems, especially for the masses, is it's really easy to take stuff for granted, right? It's like, oh, we got driverless cars. It only takes a week or two before it's like no big whoop. The Turing test was something that was like the golden chalice for years to get to back in the Siri days. And then we quietly surpassed it and blow past all these other kind of benchmarks all the time. it's so easy to just shrug it off and call it progress without looking at what the impacts might be.
Yeah, for sure. Quick question for you before I let you guys go here. I was talking about the smart contract exploit earlier that Claude Opus 4.6, which is the best version of Claude, assisted in. Do you account that to human negligence? Because they did run an audit, but I mean, obviously you can put that on the auditor, but what do you, I guess, who would you blame in that situation the most?
Yeah. And I wasn't aware of the story. I was surprised to hear it when you were talking about it earlier. So last week we talked about agents having the ability to do auditing, right? And we talked about trust and where do you place the trust. It's probably a bit irresponsible, maybe a lot irresponsible, to let agents do any thinking aside from being your research assistant, unless it can audit everything along its journey. So I don't really know how to answer your question about who to blame. It might be a function of timing. We're eager to see the tech doing everything we want, but yeah, in the case of, say, OpenClaw, the biggest problem there right now is a malicious contract or any malicious code in its tools, because it doesn't audit what it touches. It does not say, I know how to look at this and read it at lightning speed and spot that it's something I shouldn't mess with.
Yeah, I definitely think that security needs to be, crypto was all about security there still are, but never share your keys, never do all these things. And AI needs that same energy, I think, because it is exciting to be able to run an LLM locally on your machine and not have to pay like the crazy API fees and all these things. But as people are learning, they're going to get into situations that end up, biting them in the butt. But you do have a question here from Mogar the Great. Says, are the robotics companies using the Rover network? It's DePIN LiDAR. Are you familiar with this?
Yeah, a little bit. I'm not up on what they're doing lately, but yeah, I've read into them a bit. So one thing I can say, not specifically about Rover, but about DePINs and projects like this in general, there's and I don't want to diss Rover for any of the Rover holders and fans out there, because I'm not totally up to date, but there is a sense of build it and they will come, and maybe there is a customer or two out there, but pardon me, but there's a leap that has to be taken as we're all on the same kind of level playing field in terms of the progress of AI and the progress of robotics and the progress of DePINs too in the services that they serve. Where
can you break that down for the audience what DePIN is?
Oh, sure. So DePIN is a decentralized physical infrastructure. That's what it's short for. And what that means is there is a network that's decentralized that that can do different things. In the case of one famous one was Helium, where you could be a part of the Helium network and with a device. So you're not mining Bitcoin or Ethereum, but you're kind of a miner because you're taking part in this network and giving the network value by helping grow it. They eventually started doing deals with T-Mobile to be a 5G supplier. And they're talking about supplying 5G and edge network capability everywhere to things like robotics and self-driving cars. I mean, a DePIN can take many forms. And in the case of my own DePIN at Big Noodle, we're focused on AI agency. It's just agents. We're focusing there because we know where we can help and where we can do well. So Rover is one of those cases where I don't see it popping up with the trad, or I should say Web 2 robotics companies, because there might be this situation which we've seen with a lot of other DePINs where they're in a Web3 world and they're in the Web3 world only, and it becomes a big leap to get customers. If the demand generators are built into the DePIN when it starts, I think that's the only way for a DePIN to survive. Um,
You have to have
Rover,
a large like incentive mechanism
the incentive mechanism, but also
of the demand from the demand for the gotcha.
know what the trad companies actually need. Helium did that. Helium, a lot of their holders aren't so happy with the way they had an acquisition, they had injections of money, and then the holders kind of weren't included on all of that, and that's a problem. But as a DPIN and as a hardware device, it works, right? So I think we're going to see this across the board with DPINs, and it's one of the criticisms of DPINs in general.
Gotcha. But if DPINs do, have momentum and start to take off, it makes sense for there to be DPIN companies that, work with robotic companies, right?
Yeah, for sure, for sure. The robotics companies today, all the ones that I kind of keep my eyes on, their biggest obstacle, like I mentioned earlier, is good data. But they're also, they're doing an integration that's in their own bubble. Consolidation will force these different industries to work together over time. That's absolute.
Gotcha. Awesome. And then Stan says, Web3 is the best home for AI, in my opinion. I mean, I think it is definitely a good, they're going to be a partner forever, Web3 and AI. But also, we have to remember that AI is, attractive to the rest of society right now too, right? But I feel like for the first time, and there's a big argument that the use case for crypto is probably the highest it's ever been right now because of AI.
Yeah, and I hate to say it, but a world in turmoil is probably also good for crypto, right? And any kind of upheaval, maybe caused by AI, it's probably going to push crypto forward. But to his point, there's some really high costs to get the industry of AI moving forward. Pre-training is very costly. It made NVIDIA the biggest company in the world, or up in the top 3. Those GPU needs, that's hard to reconcile with community-focused Web3. But Web3 can certainly give the value where it's important, and that is in the data sets.
Yeah,
that's my mantra. That's where Web3 counts and is important.
This is the last question here from the audience here. Stan says, how would the guest rate Boston Dynamics and Hyundai? I guess for robotics, because Boston Dynamics is known for that.
Yeah. Boston Dynamics is the OG. When Google bought it, my jaw dropped. I'm like, what? What's a search engine doing with videos of trying to kick a dog down the hill? Well, I think they saw the writing on the wall. And there's a funny story built into this too, where and I don't know the deal with Hyundai, but when Google bought Boston Dynamics did a lot of deterministic programming of their robots. They did what they were programmed to do. As soon as AI started being used, a lot of learnings came out of it, and it's learnings that we've seen from Amazon and other companies who are making robotics behind the scenes. And one example is with Boston Dynamics, AI was trying to move in a way that it needed a toe. One toe, one little extra piece of plastic made much easier movement through the rest of the system. And you wouldn't have known this deterministically. You got to know it from the AI. So that's where Gemini really played a part. And the anecdote I want to leave you with about Amazon is, so they had a lot of road data. They were recording the roads just like Tesla did from their delivery vehicles. So when they started putting robots in their warehouses, they found they had to draw straight lines on the factory floor so that it looked like a street, for the robots to more accurately get to where they were going, because they were so used to following these straight lines from all these videos of streets and highways. So they had to kind of recreate that in the warehouse to match the AI model they created.
Yeah, that's crazy. But these robotics, once they get the AI integrated into them, that's a whole nother world. So we probably have a couple years of peace at least, right, before that happens.
Yeah, but let's not miss the sea change. Let's not miss the the coming production and abundance that we're going to see.
Yeah, I agree with that. Well, it's been a pleasure as always. Every week, guys, at 10:30 Central, we'll have the Big Noodle team on here to educate you and me on AI. But I'd love to give you the stage one last time before I let you go.
Thanking you and always giving you your flowers. And I'm curious to know if this format worked for the audience and for you. I think if anybody really just hated me talking at them, let us know and we won't do that again.
Mogar the Great says, "Oh, Big Noodle." I think it was good. Yeah, give us some feedback, guys. If you're listening to this, it was kind of just like almost like a lecture that was educating people. And so I loved the format because what I would do was kind of put these questions in the back of my brain. So when you were done, I was like ready to kind of get at it. But if there's another approach that you guys like better, let us know, because we're here to learn together, right? And so I appreciate you both, Dr. Min and Superfan, and can't wait till next week's segment.
Thanks all.
Right,
Thank you. Easy.
Bye. All right, guys. Yeah, interesting. I love that segment because I learned something every single time. It's only been 2 of them, but definitely continually learn through those. But let's hit on a couple other headlines before we end the show here. We're going to go a little bit into overtime. We're going to hit on this headline right here, which is Hyperliquid. Hyperliquid is a token and protocol I'm very, very bullish on, and this is some more data that kind of makes me feel that way. Hyperliquid leads 24-hour fee volume, generating 982,000, just shy of 1 million mark. Now, it also shows me how small the Web3 space is, right? I mean, 24-hour fee volume under $1 million, and it is the top fee generator in all of Web3. It's crazy. We're still early to this entire area, but because if you think about like the TradFi brokerages, right? You think about, I know Robinhood has a weird fee structure, but let's say how much volume they're doing. It's going to be way more than this, right? But with that being said, Hyperliquid is leading the way, and they're attracting a lot of institutions, and the group that's pushing crypto prices, Bitcoin, and all this stuff up in 2025. Hyperliquid is looking very attractive to them. They're reaching out to them. They're partnering with them. I think they just recently made a partnership with Ripple's institutional DEX that they're about to put out on the XRPL, right? Hyperliquid's partnering for that. They're probably going to provide the leverage DEX, right? But anyways, as you can see here, they were number 1. Right after them is Tron. Tron has a ton of DeFi activity on that chain. Then you see Solana. That's normal, expected. And then BNB chain and Ethereum kind of under there. EdgeX is something I got to look up. It's probably some institutional type of chain or something that's building up. They're constantly popping up left and right here. All right, the next story I kind of hit on a little bit, but Phantom has launched an MCP server that allows AI agents to swap, sign transactions, and manage addresses across its supported chains. So this is them following up after Base Chain. Coinbase came out and said that they have created agent wallets, right? I'm seeing a lot of stuff on my timeline as well, talking about how, I created an OpenClaw agent. I gave him a wallet, told him, hey, you have to survive off of $30 on Polymarket, and then it turned it into like 10,000. I think you guys got to be careful with those type of posts because unless there's like actual proof right there, I'm not saying it can't do those things. But one thing that we are seeing is that the wallets are being created for the agent specifically, right? So we are seeing this, and it's moving the space forward there. Something that's been kind of, I think, a concern for some Bitcoin holders is this. Right here, Satoshi remains the largest Bitcoin holder with 1.1 million Bitcoin in the wallet, right? So $75 billion as of right now. The reason why they're worried is because of quantum computing, right? They're afraid that quantum computing is going to hack the legacy Bitcoin wallets and be able to get into Satoshi's wallet and then sell it down, and it's going to crash Bitcoin. But it's what's going to happen with it. That's the question, right? It is definitely, because I can see why. How are the huge Bitcoin holders, right? BlackRock, Michael Saylor, going to handle the situation? Are they going to try to figure out a way to freeze Satoshi's Bitcoin? That has been in conversations that I've seen on my timeline. But it goes in to show the other top holders from each category of Bitcoin after Satoshi, because Satoshi is the largest holder here. And you can see after Satoshi, Coinbase is next, but that makes sense because they're an exchange. Then you have BlackRock, which is the ETF issuer, at 761,000. MicroStrategy, 415,000. The U.S. government, 328,000, and then Tether has 96,000. Right. So, I'm sure all of these entities here have a lot of power and a lot of, ways to make things happen. So I would not be shocked if they were able to somehow freeze Satoshi's Bitcoin, if that is what it comes down to here. All right. Quick hits here. Zora announced launching of an attention market on Solana. So everybody knows Zora as this, base chain social media type of content creator application. But it seems like their focus recently has kind of been shifting towards the Solana blockchain. And Wu Blockchain came out and said, Zora announced the launch of an attention market on the Solana platform. The market allows users to trade popular topics, ideas, memes, or events. Notably, Zora has received repeated public support from Jesse, which is the founder of Base Chain. And Base has deeply integrated and promoted Zora as a core part of its creator ecosystem. Additionally, Coinbase Ventures has invested in Zora multiple times, right? So there was rumor that Zora was going to leave Base Chain and just solely go on Solana. But after hearing this, I think they're going to just spread their wings a little bit and also be on Solana. It seems like that's what the approach is here. All right. One thing I do want to hit on for the Bitcoin ecosystem is there is a new platform that is out. It is called ord.net, and it is by, and I want to give a shout out to Barbara. I always do because she's so good at the Bitcoin news here. But lifofifo is his name. He is a developer in the Bitcoin ecosystem, and there's been a lot of fear that's been put out there. I feel like for this BIP 110 that could remove ordinals and all these things. But then, you see someone that's really dedicated to the space come out and create this, and basically. It is a platform that allows you to, collect, trade, and discover. So they're trying to make the experience of the Bitcoin ecosystem better, right? That is the whole point of this, right? So you can get early access, and you can join the wait list here by doing that. You just put your email, you go to ord.net, and you can add it in there. But I do think that the ordinals space is one of the most collectible areas in all of crypto. So I think something like this is huge. And someone like lifofifo that's building it, I think he's the perfect person to build it, right? He's supported with the entire Bitcoin ecosystem community, and I can't wait to see what this platform looks like. The last bit of news is kind of from the trenches here, and it's just Pump.fun is thinking about introducing, they introduced Pump.fun introduces Cashback Coins, allowing users to decide whether fees reward creators or go back to traders with the structure locked in at launch. So this could be something that helps the Pump.fun platform. There has been a very large lack of attention on traders, which is what built Pump.fun up. It's been going back to all the rewards and creator rewards and all that stuff has gone back to deployers. And I can see why Pump.fun did it from a business perspective. They wanted to, encourage these deployers to continually launch more and more chains or coins. right, on Pump.fun. But that's a big part of the problem, right? The big part of the problem is that there's so many coins that are being launched every single day that there's no value accrual across the ecosystem really that's sustainable, right? So you gotta incentivize traders so they can at least get some of the money that they lost trying to make money from all these deployers. So I think this is the right direction they're moving in, but it's going to take a lot to kind of get that back. The only things that can really bring back these sustainable, like meme coin ecosystems right now is a bull market that has a lot of liquidity across the entire industry or the market, or doing something that highly incentivizes traders. That's what's going to bring traders back. Because as of right now, you can look at the statistics and a lot of the traders are in losses right now. And that's going to wrap it up. That is the show. I hope you guys learned something. That is my goal every single day, is to try to learn together with you guys, right? Even in this slow time, it's the best time to dedicate your time and focus on what's happening. And that's why we came up with the Wednesday AI segment. We'll continue that. We'll continually try to figure out where Bitcoin is headed. That's one of my main things. I feel very confident in using that weekly chart for Bitcoin. And it's really stayed true with using the moving averages indicator. And I feel very confident in kind of where I think it's going to be heading in the next couple of weeks and these type of things using that. We can do that. We learn that together, right? But I appreciate each and every one of you guys. It doesn't matter what platform you're on. I appreciate you for supporting. If you're on any of my platforms, give me a follow, a like if you like the content. But until tomorrow, peace.